Welcome to our mid-year review. It is the Fed against the underlying fundamentals. Who's going to win on the second half? Stay tuned, lots to discuss. Hello, this is Michael Loftus for Wealth and Wisdom TV, where education is the key to a successful financial future. I am a practicing financial advisor making decisions for individuals and companies. I love the markets, think outside the box, and don't follow the Wall Street mantra of buy and hold. So if you're looking for a fresh point of view, please consider subscribing. Now, with that being said, I am human. I go through these videos. I am right sometimes, I am wrong sometimes. So now we're going to talk about the Fed and the fundamentals, right? What's underneath? Who wins? First, today's agenda, we're going to go through the big charts, our signals, treasuries, bonds, what's going on there? What keeps me up at night? And on my radar, game plan going into the second half. Let's go to the big charts. First up, S&P Daily, but I do want you to know when I go through signals, they can and do change. Today's Friday, July the 6th. Next video, mid-month, they will change over time. I'll make sure to post those changes now going forward on Twitter and Facebook, information below. So S&P Daily, when you look at this, of course, you would say it is positive, right? We had our lows. We went up, we pulled back a little bit. Of course, we've had all these Powell puts, as you will, right? Has really helped the market. And then last week, we came out again when Donald Trump talked about a potential fix with China and the tariffs. Now, I am still in the camp that that's not going to happen, but that's a whole nother story. So when I look at this, I do see that we're positive. Now, a couple things I want to point out down below, because the decision is not just looking here. I look at a few things. One, there's your VIX. You're about 14 right now. It broke 15. Okay, so you're still hanging in there. There's your line, the line in the sand. That helps me to determine where you are. Here, that's momentum. Momentum, MACD, crosses, it's positive. So that's a positive sign. Relative strength of the market, you can see we're pulling back a little bit today on Friday after an unemployment report. And now down below is something new. This is the chalk in money flow report. And as you can see, it shows flows of money into the market, right? So I'm going to go back here, pull this down a little bit, and you can kind of correlate it. When money's going in, it's going up. And now we're negative, okay? And we've kind of paused a little bit. So again, short-term signal right now is positive. Next up, I've got your weekly chart. I can look at this, you can look at this and see what I see, which is positive. Why? A couple different things. We did have a momentum crossover, okay? The only thing that concerns me, let's see if I can draw this line here. There's your line, okay, the 15-16 bottom, and we failed at it. A little bit closer up here. But right now, I'm going to call this positive, okay? So next up is going to be our monthly. Now, monthly on the signals, of course, we look at the end of the month once we close. But there's a couple things here. First off, today, I'm going to say neutral. Why? Well, you can kind of see it's ready to cross over from a positive standpoint. We don't know because, okay, it's not the end of the month. It's the beginning of the month. But I've said this before, the biggest thing is up here. That's relative strength, okay, and I have the line there. That's negative divergence. What do I mean by that? Each time we've hit a high, we've gotten lower, okay? That's not good. So the strength is lower and the market's gone higher. That is not a good sign. But right now, today, I'm neutral. I was negative, and we'll see what happens between now and the end of the month. The other thing is, if I go back to the first chart, it really has been two separate markets, right? What do I mean by that? Well, first off, right, December, your worst December in history, you're down 20-some%, and then of course you go this way. That's September 21st, 29.40, today 29.55. So we're really up just 1% from that. And to kind of give you an idea, one thing you look for is the shift. Where's the money going in this market? And I think a lot of people are going to be surprised by this. So I'm going back to September 21st. NASDAQ +4, S&P 2.26 from September 21st. Mids down 4%, small caps down 11.1. That's big. There are small companies, America's companies, what's going on in the U.S. But take a look here. Gold is up 18%. REITs 14%. Utilities 13%. And that's healthcare, although we'll talk about that in a second. So there's a big shift in the market from high beta, okay, to low beta, low volatility, and you can see what's been pushing the market lately. Yes, we've gone up year to date, but over the long term here, since September, these sectors have really outperformed. So let's take a quick look at the bond market. Again, we always say that the bond market's smarter than the stock market. So when you look here, rates continue to go down. All right, our yield spread, there's two yield spreads we look at, 10 minus 2, 0.19, not the low for the year, but the big one is over here. 10-year minus 3-month is negative 0.25. Most importantly, we have been negative on that for 30 days. Every time, since 1940, except 1987, that has led to a recession. So that is a real important indicator that we are going to continue to watch. And the other thing is people ask about other markets, right? So here's your 10-year at 1.96. That's as of Wednesday. It updates at the end of the day. But the UK's at 0.7, negative 0.15 Japan, Germany, negative 0.39. And over here I have a list of all in 2-year bonds, and look at all those negative rates. Imagine giving the government your money and you're paying them. Does not make any sense at all. Next up, what keeps me up at night? So what keeps me up at night? First off, I have been quite a contrarian. We'll talk about where we are allocated right now, but last week when President Trump came out, this was all the data that came out that day. Every piece of this is negative. Manufacturing Chinese went below 50, which means it is contracting. Vehicle sales in Japan, consumer confidence down. Everything here went down that day. That's the fundamentals I talk about, and I continue to watch. How about GDP? GDP has now gone down to 1.5. Hold on. Wednesday, they moved it again to 1.3%. As Joe likes to say, just the facts. I'm not making this up, but this is the things that I see below the surface. Empire State Manufacturing, worst month-over-month fall in history. Empire, New York, manufacturing, which leads us to PMI, the overall ISM number, PMI composite, 51.7. Look at that trend right there. Hold on, let me go back. I didn't have that on right. Look at your trend, okay? Down, 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 down. Okay, that is not a good thing. That is manufacturing, right? Next up, S&P earnings, EPS pre-announcements, okay? Highest level since 2006 of companies looking at negative earnings. We're going to talk more about that. Companies are warning that earning results are going to be brutal, okay? I mean, I don't make this stuff up. I just read it and react to it. Next, good news. This is now the longest expansion in history. How does it feel? Does it feel great? Not really, right? This is the longest, but the lowest performing one in history as well. I've talked about this, our friend Mr. Powell. He doesn't have the ammunition. You've got Fed fund rate. So today, good news was bad news. Last month, bad news was good news. What, Michael? So last month, we had a terrible unemployment report, and everyone thought we were going to cut rates. Today, we had a positive one. That's why the markets are down today. I think they wait till September. The data doesn't support at all a cut right now. Earnings. Remember, when you buy companies, when you buy the index, it's based on future earnings. It's critical. Now, here is just 18 of 497 companies have reported so far. How about that number right there? Negative 18.34. So we've gone from 24% month over month, to 12% to 1.56. Now, I don't expect that number to be minus 18, but it's going to be negative this quarter, folks. So this market continues to go higher, driven by the Fed without the support, without the fundamentals underneath. Now, let's talk about what's on my radar. I've been saying that I've been in low beta, low volatility versus high beta, okay? Some of those sectors could include utilities, REITs, Treasuries, healthcare, gold, home construction. Like, how could that be? Low rates, right? All of these are pretty much interest rate sensitive. Communications, and then I added consumer staples and high dividend, okay, going into the month of June. So let's talk about specifically today gold and healthcare. Let's switch back to the charts. Okay, first up, let's talk about gold. I'm in or out. Why? No earnings, no dividend, up or down. That's your choice there when it comes to gold. What do? I look at death cross, golden cross. Death cross is when your 50-day goes over to the downside of the 200-day moving average. A golden cross is when your 50-day goes above the 200-day. And you can see here, right? You're going to go out. We're going to go in, out and in. If you zoom in, you can see what happens. We got in over here in November, a little early, just like what was going on with interest rates going down, because gold does like low rates. So when you look at it, and when are you looking to get in? And that's the question. So right now, there are a couple key things that happened here. One, 1350 was major resistance. We talked about that last video, and I added about 3% to our overall position. We broke above that, you get back in. Now, what happens when you go that high? You're going to get overpriced. So relative strength gets overbought when above 70. All right, and look at momentum. Momentum just soared straight up there. So that's a good looking chart. Gold volatility, you look there, pretty low. It's high right now because it's gone up so much. So I'd be looking for, again, we're in it right now. I'm looking for an entry point. The last thing I look at is relative to the S&P. How is it performing relative to the S&P? As you can tell, it had done some underperforming, and now we're coming back up, and it's pointing up over there. So a good time to look at gold. Next, let's talk about healthcare. There's a couple things that I see. One, you see that line, right? And that's resistance. When it broke through, that's a good thing. Now, it broke through, not uncommon to pull back and test. And that's exactly what happened right there. That being said, you see this, golden cross. Let me do that again. Golden cross. Your 50-day has just gone above the 200. That's a good sign right now. So I definitely like healthcare going forward. Now, overall, again, for me, I'm not looking for high beta, high risk, tech, international, emerging markets. I'm looking at some of those sectors, giving me that dividend, less aggressive, and let's see what happens. Now, the Fed can change everything with what they're doing, if they cut or not, and I don't know how much of an effect that's going to have, But right now, we like where we're positioned, but there's a lot of negative stuff underneath that has me concerned today. That being said, fully invested as of today. When I say fully invested, I only have about 5% in cash right now. Let's wrap it up with fear and greed. So again, wrapping it up with fear and greed, information on how these numbers come together. Below, as I mentioned, 2 positive, short-term, mid-term, and 1 neutral. That's the long-term. That had been negative, so it has been upgraded there. And we'll see between now and the end of the month if it's going to break through or not. Now, at the end of the month is the Fed meeting. I don't see the rate cut, so it's going to be a tough time. The other thing I want you to keep in mind, summertime, volume really goes down. You have to be careful with swings. Fear and greed, 62 this week. Get a little greedy. 2 weeks ago, 39. Thanks so much for watching. Michael Loftus, Wealth and Wisdom TV.